Good morning. It's June 27, 2025, 8:16 a.m. Japan time. Markets continues to show strong momentum. The Nikkei closed yesterday at 39585 yen, and during overnight trading, it climbed to around 39900. We are inching close to 40000, a level that once seemed symbolic but now feels within reach. The volatility index remains low at 23.12 and the interest rate at still high. As I have said many times, what really matters now is the market's ability to tolerate elevated PER levels. Yesterday's PER stood at 50.66, and that seems to be the selling for now. So the real driver becomes EPS, and that's been climbing steady. EPS is now at 2527 yen. This rebound in earnings is likely what's supporting the current strength in the Nikkei. Interestingly, around this time last year, June 27, 2024, the Nikkei was at about 39345. So we have not only catch up but surpassed that level. Looking at the chart, this rally resembles last year's post-June surge. Are we about to repeat the pattern or push even further? What markets makes this moment tricky to read is investor psychology. There's been caution ahead of the problem about Chinese, Taiwan, or Iran-Israel problem, Russia-Ukraine problem. Many traders were shooting the market, but Trump stepped in with the bunker buster strike. That action, aggressive as it was, sent a strong message. It was not just Iran that felt it. I believe the psychological shock extended to countries like Russia and China. If China was considering a move on Taiwan, that plan may have pursued. The world got a reminder. When Trump acts, he acts decisively. The show of strength likely reassured the markets, calming geopolitical risk. It feels like Trump premium is being priced in. Investors trust he will rebound forcefully if needed. So, ironically, the banker buster, despite being a military escalation, was bullish for markets. It may have cleared the way for a rally that could break past 42000. Yeah. Fundamentally, the economy is still powered by strong electricity consumption, sign of industrial and social health, and geopolitical risk had been capping sentiment, but now that's fading. Yes, and there are still some supply chain concerns about Trump tariff, but market seems to have priced that in. Yesterday, price momentum was strong across the board. More than 2,000 stocks over closed higher. That brands support the view that this is not just a temporary move. In the US, the S&P closed at 6141, up 0.8%. Bond yield have dropped to 4.8%, which is also helping stabilize the outlook. So both Japan and the US are showing strength here. Gold is hovering around $3300 and Bitcoin is grinding upward. But in a risk-on environment like this, equities still outperform both. Geopolitical risk, Russian, Iran, Israel, and Chinese have quieted down a bit since the U.S.-Ukraine memorandum was signed. Even Russian tensions have eased. It seems like markets are moving past geopolitics. Even tariff issue now feels priced in. Which bring up an important question. First, the next risk. Right now, nothing major is clearly visible, and the ambitious, ambitious is what creates a strange sense of calm. If I had to flag something, I'd say that U.S. debt unsealing and the potential credit rating downgrade might emerge. Plus, the EMEA found in April that global financial assets look overstretched, but no one's paying much attention to that for now. So while that could become the next concern, it has not hit yet. For now, it's strange across the board. Um, Parade of the geopolitical risk resolution, if you will. That's it for today. If you enjoy this podcast, think of it like going long on up at my contents. Follow and hedge your search with me. Talk to you tomorrow.